Welcome back to Over the Horizon, a Bitcoin podcast. Today I'm here with Lawrence Lepard. He's the co-founder and advisory partner at the Bitcoin Opportunity Fund, and of course, author of The Big Print, the Amazon best-selling novel. Lawrence, thank you so much for coming on the show.
Great to be with you again, Joe. Always enjoy talking to you.
Absolutely. Yeah, no, things have heated up quite a bit in markets. Obviously, gold and silver have had a hell of a year. The last time we talked was in April, literally right after Trump instituted his tariff policy. A lot has happened since then. We have a lot of recent news as well. The Fed announced its latest QE, not QE program. So it's kind of the perfect time to have you on and chat about this. I know you're fired up and you have a lot of thoughts about this. So I guess the big question right off the bat is there's this big debate going on. Is this QE? Is this not QE? They're calling it something entirely new, reserve management purchases, as they usually do. They come up with a new acronym. What's your take on what's happening right now?
Yeah, that's a great question. So let's not kid ourselves. It is money printing in the sense that the Fed is using newly created dollars created with a keystroke in order to buy treasury bills. They're not buying duration. So as a result of that, they're claiming that it's not QE per se. It's kind of a semantic, distinction without a difference because it really is very similar to QE. They are increasing their balance sheet and increasing the stock of money in the system. And I would say, one, it's interesting because until recently they were letting their balance sheet run off and they were tightening, so they were in a quantitative tightening regime. They signaled they were going to stop that, and we knew that was kind of coming. What we didn't know is that they were going to pivot and actually go to a printing operation, which they've done, and they've rebranded it. Instead of calling it QE, they're calling it reserve management, and it's because the plumbing is tight. Those of us who are in the Bitcoin world and all the people looking at the monetary system understand is that you cannot continue to grow debt without growing the underlying money supply, or else you don't have enough money to service the debt. And so we always knew that Powell's attempt to be Paul Volcker, while it brought inflation down a bit and caused M2 to go negative for a little while, M2 growth to go negative for a little while. We knew that it couldn't last forever, and the reason is just mathematics. I mean, again, if you do not grow the money supply, how do you pay the interest on the debt? So, they realized they were getting to a point at which, historically, this has caused trouble. In 2019, we saw the repo blowout, which led to what I'm actually calling this the second Powell pivot, because the first Powell pivot is they were tightening in 2019, and then we had a repo blowout and spike, and that was based on the reserves in the monetary system getting too low. And that led to a reversal of tightening and quantitative easing. And then, of course, not long thereafter, the COVID hit. And then we got what truly was the second of the big prints, the first being in 2008. And it's interesting, this one, Lynn and I have had friendly banter back and forth on Twitter. She's calling it the gradual print. And she's right. I mean, 40 billion a month, 480 billion a year is not multiple trillions within a short window. Although I think the original big print, the one in 2008, probably started off about this size, and they ramped it up over time. They went from 800 to 3 trillion on the Fed balance sheet, but it took them 2 or 3 years to do that. The second one, the COVID one, was much more aggressive, and they went from 3 some odd trillion on the balance sheet to 9 trillion at its peak. It's come back down to the sixes now, but and that was a much more aggressive big print. And she's right. We really are kind of gradually printing. It's just a shift in the tides from tightening to printing. What I'm believing or suggesting is that I think this is just the beginning, and it's very likely that this will be adjusted upward as time goes by, because, my sense is, and it's interesting, they originally, when they floated this idea, Bank of America and a few others kind of floated this idea as a trial balloon a week ago or so, and they suggested that maybe it would be 20 or 25, and then they actually came out with 40. And they said, but maybe they'll cut it back over time. And they said that 40 because they wanted to get ahead of it. Now, let's not make any mistakes. There's no way they would have done this if they didn't have to. They did not want to do this. They want to be good monetary stewards. They want to get inflation under control. It's not, here they are changing from monetary tightening to monetary easing in an environment where inflation is well above their target. It's running 3% when their target's 2%. And when the stock market's at a record high, and when employment is, while a little bit soft, it's still generally speaking healthy. So if they're printing money in an economy that's more or less doing okay, imagine what happens if any of those other conditions change. Employment gets worse, the stock market goes down, the leverage starts to really bite. That's how I think we go from Lynn's gradual print to Larry's big print. So I kind of think that's where we're going. But, one step at a time. I mean, to me, I was a little shocked actually when I saw the press release yesterday. I thought, well, they'll hold off as long as they can. Even though it had been floated in trial balloons, I thought, well, it probably won't start till next year. But here they are, and they're doing it. And not only that, but they decided to start it today, the 12th. I mean, the press release was 2 days ago. So it must have been fairly, pressing in their mind that they had to do this because they announced it on the 10th and they started on the 12th. So here we are.
Yeah, no, it seemed more pressing than a lot of people realized. There was this going assumption for a while that because the Fed was ending QT on December 1st, they weren't necessarily going to have any sort of asset purchase program until maybe early next year. January, February, I think, was being talked about. And then all of a sudden, we see Powell has his presser, and then they announced that they're going to do these purchases 2 days later. It came as a shock to basically everybody. But I tend to agree with you that what we're seeing now is basically like the first phase will ultimately become a much larger operation. Here's a chart. This is the Federal Reserve's balance sheet. This is on the Bloomberg terminal. And you can see here that back in 2019, this is kind of Powell pivot number one. When there was this cash shortage in the repo market, overnight rates spiked. The Fed actually stepped in with a very similarly sized program to what we're seeing now. They were doing $60 billion a month. Now we're doing $40 billion. And the New York Fed desk actually announced that they plan on doing $54 billion in purchases over the next 30 days. So elevated even higher above what Powell said.
Was that really? Is that right? I haven't seen that. Was that news today?
That's right. Yeah. Through Newswire, it got released yesterday, I think at like 3 or 4 p.m. Yeah. So
there we go. Right.
Exactly. So they're already larger than anticipated, but you can see here that, it kind of starts in the money markets. It starts in the plumbing. They do what they can and see if that's enough. But then, as you mentioned, if it isn't enough and any of those other conditions break, whether it's the labor market, whether it's inflation, economic activity, some black swan event, they're forced to print even more. It's funny. I joked yesterday in a tweet that the Fed went from $60 billion a month in 2019 to 6 months later, they were doing like $1 trillion a week or something insane like that. And that's what you see here. So it really does feel.
We're not necessarily going to have another COVID. I mean, I think there's some validity to Lynn's gradual print thesis, but I also think, this is set against a backdrop of three other important things happening. And that is, if we look at the chart of the 10-year Japanese Treasury bond, we look at the chart of the 10-year German Treasury bond, we look at the chart of the U.S. Treasury bond 10-year, they're all going up very persistently. And the signs of monetary tightness, one of the great signs is rising interest rates, right? I mean, when things are tight, interest rates go up. They're not finding enough buyers for the bonds. And so we see all three of those going up. There's a guy on Twitter named The Great Martis who is actually a gold guy and hates Bitcoin. But other than that, he's got some good charts. And he shows all three of those in a chart. Also, Jim Bianco on Twitter had a really good chart that shows the U.S. 10-year had been in kind of a nice downtrend for the last 6 months. And it just broke the upper boundary of that downtrend line. So, it seems to me that we are going to increase the sizes. It's interesting you mentioned it's 52. That kind of reminds me of what happened recently where, as you recall, not long ago, maybe a month or so, Argentina had trouble defending their currency. And because we wanted to keep Argentina in our sphere and not China's sphere, Basent immediately came out and said, well, we'll issue $20 billion in swap lines. And, lo and behold, a week or two later, 20 billion became 40 billion. And so in the financial markets, when, things aren't going the way you want, you come in and you try and address it by taking policy actions that address it. But if they're not enough and, these bonds continue to trade poorly, I think it's a fairly high probability bet that these policy interventions are going to get bigger, right? And so eventually maybe we'll exit the, Lynn's gradual print and, we'll be in Larry's big print.
Yeah, no, it certainly seems.
We'll have to see.
Yeah, absolutely. I pulled up the chart, but I can't format it necessarily correctly.
That doesn't matter.
I can't show it up on screen. But you have seen since late November, the 10-year Japanese bond yield is up from 4% to 4.18. And over the last month and a half or so, we've seen the 10-year yield in the U.S. Treasury creep up. Really interesting times. I have another chart here that I want to show you. This is the interest expense on the debt, the debt that's coming up rather. And this is what the Fed has to roll next year. I have a feeling this is something to do with why we're doing the current liquidity management operations that we're doing right now.
Absolutely. And this also has to do with what Trump and Basent are trying to do at the Fed. And we can talk about that in a minute. But, there's a chart that you're not showing, but most people have seen, which is the U.S. federal interest cost. And it's just crossed the $1.2 trillion annual rate, which is really a rather stunning number. And so, that makes it larger than everything except Social Security. It's larger than defense, larger than Medicare. And, basically, this is the process of a debt doom loop where, we run a deficit, we sell bonds, the bonds don't get well received, interest rates go up, that makes interest costs go up, that makes the deficit bigger, that makes you sell more bonds. And so it's a reflexive, there's the US government interest expense, it's a reflexive negative loop. And so that's clearly what's going on. And that's why Trump has been so aggressive, why he attacked Lisa Cook, why they were able to get, a couple of the Fed governors to resign, and why he put Moran in there. And, now he's probably talking about putting Kevin Hassett in there as chairman. And I think it's pretty clear, Trump has said he thinks interest rates should be 1%. Hassett and Moran have said something between 2 and 3. As you know, we're now at 3.5 to 3.75. And so, they are going to have to shove this interest rate down. And the interesting thing, as I said at the beginning of the program, is that here they are, they're easing in a very, very hot economy. And okay, you can do that, but the natural outcome of doing that will be monetary supply growth. And, and as a result of that monetary supply growth, we'll see inflation. So.
Yeah, it's this trend of fiscal dominance that we've been seeing, right? The government debt is so huge, the deficits are so huge that, as you mentioned at the top of the hour, regardless of inflation, regardless of the labor market being somewhat okay, the Fed needs to prioritize bringing interest rates down in order to help the government manage its debt. I think that plays into a lot of what Trump is trying to do with the Fed, between kind of bullying Powell to bring rates lower, even though he may not necessarily want to. He's got a few months left in his tenure. He wants to ride off into the sunset. He's looking at putting in Kevin Hassett, who you mentioned, former Coinbase advisor, huge dove. He's not even in the position yet, but he's a front runner, and he's already saying things like, rates should be down substantially from where they are now, and a lot of other things like that. What is Trump trying to do, and what is Bessent trying to do to transform the Fed? What kind of pressures are they applying, and what are the outcomes that they're trying to achieve?
Well, I think they're trying to figure out kind of a national industrial and financial policy. And I actually think Bessent has said a number of things that would indicate to me that they're trying to merge the Fed with the Treasury and make monetary policy part of national policy. And I mean, let's just go back to the last time that we did this. I mean, we're in a competition with the Chinese, for financial dominance of the world and AI dominance of the world and a lot of other things. And, the Chinese are, they're in many ways screwed up, but one of the things they do have going for them is running a communist system. They can just, implement policies. They don't have a nasty thing called a democracy, and they can just decide to do something and do it. And, we're at this stage where we're very similar to where we were coming out of World War II, which is to say debt to GDP is extremely high. The last time we were this high was after the war. And they've talked about going to a wartime footing here in order to win in the competition versus China. And if there's one thing we know about Trump, Trump loves to win, and Trump does not want to let China win. In fact, one of the ways we were able to get him behind Bitcoin and so much of what's going on in our space was by saying to him, "Hey, sir, these guys are gonna dominate this if we don't get on top of it." And he listened. And so, my sense is that Bessent and Trump both, want to make interest rates part of national policy. I was shocked to see, I think you probably saw it too on Twitter recently, Trump said something along the lines of, we could possibly have 25% GDP growth, right? Wasn't that stunning? Now, there is literally, you and I both know the odds of having real 25% GDP growth it's non-existent. It's literally impossible. But one of the ways you can do it is you have 5% real growth and you have 20% inflation. And that will get you at the top line, that'll get you 25% GDP growth. And, that's what we did coming out of World War II. I mean, in World War II in 42, they started suppressing interest rates. They held the short-term rate at 0.375%. They held the long at 2.5%. And they basically, killed bondholders. And of course, they went out and they said, for patriotic duty, buy your Liberty bonds and so forth. We've got to win World War II. And people did it. But they got killed because in the late 40s, they didn't end that policy until the Treasury Accord in 52. In the late 40s and early 50s, the inflation was just raging. I mean, there were months when inflation was 20%. And, people forget about that part. And so, if we pursue the same policy, which is to say, in order to get our interest costs down, we print money to buy our own debt, and we grow things very, very rapidly. We get, a stock market that roars. We get, gold that roars, Bitcoin that roars. Everything nominally goes up quite a bit, and inflation be damned. And I think that's that's really, what I hear coming out of this administration, that we are going to run this hot. And they really almost have to, Joe, because so much of the world now actually depends on the stock market. I mean, you think about, boomers and their savings, you think about regular people and their savings, you think about, capital gains taxes they get off of it. I mean, if we have a severe economic downturn, or if the stock market goes down, or both, the $1.8 trillion deficit is going to go up to 3, 4, 5 trillion, very much the way it did in the 2008 example or in the 2020 example. And, that deficit will only mean more bonds to sell, which will only mean more pressure. I mean, there's a fixed number of buyers of bonds, right? And so, if you come at them with more bonds to buy, they're going to say, well, I'm not going to buy those unless I get a higher rate of interest. And that higher rate of interest drives, the cost to the government, which then says sell more bonds. I mean, that's the reflexive death doom loop that I mentioned earlier. So really, the only way out of this, in my view, is just inflation, and not just a little inflation, a lot of inflation. In other pods, I've said many times this, and I was alive. I was young, but in the 70s as a teenager, and this is going to be like the 70s, where we have these waves of inflation. We had one that took us from almost 0% to 9, and then Powell tightened up for a while. We brought 9 back to 3, but we didn't get back down to the 2 target. And my sense is this next one's going to take us from 3 to 15, or I don't know, 12, or some higher number, because that's just the way this goes until we do a monetary reset, which is the solution at the end of the game, right?
Yeah.
To do a reset.
It certainly seems that way. Does that have something to do, and this kind of a segue into the next thing that I want to talk about why gold and silver have ripped so much this year? This is Bitcoin, gold, and silver as a percentage growth since the start of the year. You can see it hasn't been necessarily the year for Bitcoin. We'll talk about that lag relationship in a minute, but it feels like gold and silver kind of sniffing out what's happening here.
That's exactly right. And I hope you have the chart that you and Dave, my partner David, did on the lag between gold and Bitcoin. So brilliant work on your part. Yeah, exactly. But as I've said in other pods, and I think most people understand, look, you and I know Bitcoin. A lot of people know Bitcoin, but the whole world doesn't really know Bitcoin. And people like in China and India, most places, they really don't believe in Bitcoin at all. And yet they understand what gold is. It's been around 5,000 years. And they understand that it protects you against monetary inflation. It always has, it always will to a degree. And so what's happened really is, I think as this inflation has become more obvious, and it happened this year, when Doge failed, in the beginning of the year, there was all this happiness that, okay, Trump's elected, we're going to have Doge, we're going to cut back, we're going to balance the budget, everything's going to be good. But you know what? Doge failed. And when Doge failed, and the big, beautiful, and we had this Liberty Caucus in Congress that was going to tighten up and balance the budget and all this stuff, and Trump steamrolled them. And so the big, beautiful bill came through, and yeah, we got some tariff income. That's a positive. That's a net positive. But the big, beautiful bill pretty much wiped all that out. And so, we ran a flat year-over-year deficit, and I would argue it was actually a little higher. They did some legerdemain to make the numbers cook the numbers a bit. But we ran a flat year-over-year deficit in a healthy economy where the deficit should be getting smaller. And so, I think at that point in time, late this fall, what happened is a lot of people woke up and said, this monetary debasement is just going to continue forever. This government is out of control. They embrace Lynn's meme that nothing will stop this spending train. And so gold, which was in the 2,500 range at the end of September or August, early September, just finally said, okay, I get it. And it shot up to 4,400 really quickly. And now silver has followed suit, which tells you we're in a real precious metals bull market. Bitcoin, sadly, has not gotten it. And Bitcoin actually is much more, so gold is reflective of monetary debasement, always has been, always will be. Bitcoin's a little bit reflective of monetary debasement, but that's only the real hardcore maxis that get that piece of it. The rest of the market tends to look at it a little more like a trading widget and a little bit more liquidity driven. And so, it tends to lag gold on this monetary debasement thing. And it did, in the last couple of cycles, and it's doing it again. And so, I've kind of said, and others have mimicked me on this on Twitter and said, gold leads, but Bitcoin follows harder. And so if you look back to 2020, it's a very good example. And I like this example a lot because, when COVID came around, go back, scroll over to your 2020 thing where you can see the dip. Yeah, you can see the dip in early 2020. Look at a March, and gold went down substantially. And then they announced they were going to print like crazy. And gold took off like a scalded dog, and it went from 1,500 to over 2,000 really quick. Okay, and that was the early part of 2019. But Bitcoin ultimately did that, but there was a lag. It didn't do it on the exact same time frame. It did it with a lag. And so I think that's just what's going on right now. Gold has already taken off, and it's about to hand the baton to Bitcoin. And by the way, this chart, the scales on this chart are different. It's important to point out that on this chart, gold's gone from 1,200 to 2,000 in that time frame. In the same time frame, Bitcoin went from 10,000 to 60,000. So, gold went up 2x and Bitcoin went up 6x. So that's why I say Bitcoin follows harder. And, as the chart you showed a moment ago, the one that you and David built, I mean, tends to be, it seems like on average, about a 100-day lag. Mm-hmm. And so, it would seem to me that, the way I calculate it, we're just about at the time where Bitcoin's about to launch. So, in spite of all the, a lot of people out there are kind of going, gosh, this Bitcoin thing is not really working. There's a lot of inflation, they're printing money, gold's working great. Why isn't our stuff working? And I'm like, yeah, we've seen this before. Just relax. It's going to work. And when it does work, you're going to be really happy that you have it, because I don't think it's going to 126. I think it's going to 200 or 300 or 400. So, and at that time, gold will probably take a breather. I mean, don't get me wrong. In 5 years, I think, Bitcoin could be at 500 and gold will be at 10,000, but that's 5 years out. So, we're kind of talking about the short-term squiggles. Look, one thing that is interesting, look at that chart all the way through. They are correlated. I mean, there's no doubt. I don't know what the R squared is on that thing, but they're definitely trending together.
With the 100-day lag, it's about 0.7, I believe.
Okay, fairly good. Yeah, fairly good. So, there's no doubt that they're both reacting to the same thing, which is printing money.
Yeah, absolutely. It seems like gold has handed the baton to silver off recently, and then you're going to trickle down more into the higher beta names. All of the conditions are set up for next year for a pretty explosive rally in Bitcoin. Like, you have the Fed not just cutting rates, but now they're doing this asset purchase program. They've set a floor, like $40 billion. If you read into what Powell was saying, you read the note that the Fed released, that's kind of the floor. In the first month, they've already announced that they're going to be doing more than that. And so amidst that backdrop, after Bitcoin has already had a 35% correction, I just don't see a world where we don't end up next year much higher than we are currently. I don't understand all the bearishness. I have a feeling it has to do with some of the Bitcoin cyclicality that people believe is still in play. I'd love to get your thoughts on that, this idea of the 4-year cycle with Bitcoin.
Yeah. So I think the 4-year cycle got originally built around the halving thesis and the way that the mining reward went down, by half every 4 years. And that clearly, drove the supply side of the equation in the earlier years. I think we're now at the stage where the amount being mined relative to the amount outstanding is small enough that that's not really an important variable in driving the Bitcoin price. And so I kind of think the 4-year cycle is dead. And I don't think we peaked in the last one. I don't think we hit a mania phase. And I think that, it's gotten extended. Now, there will still be cycles. I think the cycle tends to be driven a little bit more off of just how much leverage is there in the system. And, at some point in time, Bitcoin's going to take out that 126 and really start to trend heavily towards 170 or 180. And let's face it, we're a nation of gamblers, and the world is a group or a bunch of gamblers. And they're going to be people who go in there and buy Bitcoin on leverage, and they're going to shove it to 300 or 400. But then we're going to get a 50% correction off of that. And the last person who buys it at 400 and watches it correct to 200 is going to feel like shit. But, all those of us who own it at 90 are still going to be okay at 200. And maybe at 400, some people will peel a little off. Maybe they won't. I doubt I will. But, my view is I might slow down my buying at that stage. I always, when I'm out there looking, when I have new cash that I earn, I kind of ask myself, where do I want to put it? And I always kind of look at what's relatively cheap. And, a couple of years ago, gold was kind of relatively cheap compared to Bitcoin. Now I really think Bitcoin is very relatively cheap compared to gold. And I haven't mentioned this in a tweet a while back. I was actually selling some gold items to buy Bitcoin items. I bought some more MicroStrategy. And part of that's because I've got gold stocks that are up 4x. And they're good stocks, they're good companies. I think they'll go up higher in the next couple of years. But whenever you see a 4x move in a year and a half, it's wise to maybe take a little off the table and rotate it into something that's cheap on a relative scale. And gold compared to Bitcoin, or Bitcoin compared to gold right now, is very relatively cheap. It's way down at the bottom of the range. So
yeah, you can see that here. Bitcoin is at its most relatively cheap to gold since the start of 2024, and all the way back to.
Right, exactly. And by the way, I don't think that top at 40 is locked in stone. I think the next top, we're gonna go define a new range where the next top is going to be between 60 and 90. So, because I do think that over time, Bitcoin is just going to continue to demonetize gold. There was a good chart on Twitter I saw a day or so ago that showed the growth in addresses. It just is relentless. I mean, the only thing that could stop Bitcoin is if everyone kind of decides I'm not going to use this anymore, and yet there's just no evidence of that. I mean, Harvard University just tripled their allocation. I mean, they're not stupid. You're seeing, you're seeing just all kinds of new buyers.
It's now the largest single asset in their fund.
Yeah, exactly. And so there are, and there are just other instances of it. I mean, I think the Luxembourg Sovereign Wealth Fund took a position. I think the Czech Central Bank took a position. It was trivial, small, but the point is that you're just seeing more and more of this adoption, and that's why there's a pretty good bid underneath it right now. I mean, I know some people have sold it here thinking it's going to 60. And in a risk-off environment, COVID-like, where everything correlates to one and everyone sells everything because they're getting margin called, could it go to 60 briefly? Yeah, possibly. And then the Fed would come in with the fire hoses because the world's going to end, and it would come out that hole and it would shoot up to 200 very, very quickly. I mean, this really is no way to manage a railroad. The Fed is they're just out of control, and I tweeted about that recently. I mean, we go from interest rates of 7% to interest rates of 0, back and forth, back and forth. And in the 80s, interest rates as high as 20%. I mean, it's nuts. I mean, it's just, you can't have a committee of 12 people setting the price of money and expect it to work. I mean, that's a stupid notion,
Yeah.
But that's what we got.
Yeah, it's a non-starter. I think I have the tweet up here. You said, picture a car driving on an icy road, bouncing off the guardrails. There is your Fed interest rate policy. Because that's ultimately what they do. They drive using data that's in the rearview mirror. Basically, they drive in the rearview mirror. And to add on top of that, the recent decision that they made, first Fed decision ever, where they had largely no government data in order to
The government should tell them the data. Yeah, well, they could use that. I mean, and to be fair to Powell, I mean, he's even said this. He said, I feel like I'm walking in the fog. And I mean, he's admitted how hard this is. And he's admitted that, he's not sure he has it right. And I give him some credit for that level of honesty. But, if he were super honest, what he would say is, this whole thing is just broken and stupid. We need to reset it. There's a chapter in my book that talks about how to do that. And so, the real solution here is to return to sound money, which and I know, and a lot of people know, most Bitcoiners know. But sadly, we probably won't get there until we experience some more pain, because politically things don't tend to happen unless there's, pain and an outcry for them to happen. And we're not quite at that point yet. I mean, I don't see people wandering around the country, walking on street corners, protesting, give us sound money. I mean, it's not really happening.
Yeah, absolutely. It's a really interesting time in the world because you had this government shutdown. There seems to be this huge political polarization in our country as well. Zohran Mamdani being elected in New York. There seems to be two disparate schools of thought that young people in particular are moving into. I myself, of course, and am an avowed Austrian economist. But a lot of folks are moving in the direction of more socialistic ideas. All that has to do with the money, right? And I tend to think that the sooner we can educate on these sound money principles, the sooner that we can prevent these young people from moving in that direction, because the financial nihilism is very real. But some people have chosen to elect leaders who will fix that financial nihilism by printing money out of thin air and giving it to them, or stealing it from people via taxes and inflation and giving it to them, while others want to opt out of the system entirely and buy Bitcoin. There's just this massive education gap that needs to be filled.
There really is, and it's sad because everyone knows, anyone who's studied history knows that socialism just does not work. It's a failed model. It's a step before communism. That really doesn't work. And sadly though, you look at a Mamdani and he's a good politician, right? I mean, he knows how to tell people what they want to hear, and they are hurting, and they understand that, and they feel like he understands them, and they buy into his notion that something for nothing is available. And that's a seductive notion. I mean, the sad part is it's just not true, but it is seductive. And so, some segment of our citizens are going to have to learn that lesson the hard way. And hopefully enough citizens understand that's a broken lesson, but a broken model. And we'll see what happens. I mean, I think that, if what I'm describing occurs, things are going to get worse. Inflation is going to get higher, and, heaven forbid, but, blue team could win 2026, probably not. But 2028, very possibly, not because, they've got better ideas, their ideas are wrong and broken, but more because, when things are hurting, when people are hurting, there tends to be a natural tendency to throw the bums out. And, okay, let's say it's now 2028, the next presidential election. And let's say inflation's really ravaging people. It's been terrible for quite some time. And the Democrats will come in and they'll claim they can fix it. They can't. And they'll have a lot of cockamamie ideas that won't work, but they'll sound good, and they'll talk about stimmy checks and all the other things that they can hand out. And, some portion of the uneducated populace is going to go, yep, I want that. Sign me up for that. Throw these bastards out. I hate the inflation. And so they'll get the new team in, and the new team, by the way, will probably be much, much worse. They'll do universal basic income. They'll forgive student debt. They'll run it incredibly hot. And at that point in time, my model is that the currency system fails, that we really do have, South American like super high rates of inflation, arguably bordering on hyperinflation. And we're really forced to do a monetary reset. And so I think that's where we're going. And, I've said in past speeches, or past talks about this, I think, the person who does that monetary reset is President Saylor. Because I think President Saylor gets elected in 2032 after the Democrats have completely effed it up for 4 years. And he has the receipts, understands the history, explains the solution, and everyone's so disgusted and tired of being broke and having the system be broken that they listen to him, and we return to a sound money standard. So, that's my idealistic and hopeful outcome of it all. But the sad part of that is that we've got some years between here and there when that, for that to occur.
Yeah, very well said. That would be a very interesting chapter in U.S. politics if Michael Saylor were to be elected president. I think at the very least, someone running the country with much more competence around these things would be extremely nice. But I just don't think that that's possible, unfortunately. You see the deficit.
Not yet, but don't give up. I mean, and don't give up on balancing the budget. I mean, one thing to remember is Lynn says nothing stops this train. She's right, given the way the demographics are right now, and it's mainly because Social Security and Medicare, my generation, is sucking the system, dry. Not that we got a good deal, because we paid in infinitely more than we're getting back out if you compound it at any reasonable rate. But these you can't print knees and hips and all the things that the boomers or want. But that and the politicians can't change that because of the way the votes are set up. But the boomers aren't going to live forever. And, the voting blocks are going to change. So they're going to be, as boomers die, they're going to be less boomers. There are more of you guys. And I know your family is growing, right? And there'll be other additional growing families and new voters coming into the rolls. And eventually, they will be able to get some of these expenses under control. And maybe that'll help solve the problem of, the huge government deficits. Because really, at the core of it all, the reason for this monetary debasement is that the politicians and the government just cannot help themselves from spending money to buy votes. That's really the problem. If we had a balanced budget, you could actually, probably operate with a hard currency, non-backed hard currency if the Fed were responsible. But since we don't, and since it's getting worse, it strikes me that it's pretty certain to spin off into, being out of control.
It certainly seems like that. Over the next decade, it certainly appears that we're heading into a period of stagflation, if you will.
Yes.
I don't know if you agree with that, have any thoughts on that, but some recent data that really was startling. It's been a while since I had looked at JOLTS job data. JOLTS job openings totally flat since 2022, completely flat. Meanwhile, you have price inflation that's now rising once again. The Fed is cutting into that. It really seems like the Fed is sacrificing inflation in order to potentially help the labor market. But really, that's just the obfuscation underneath the surface. It's really to prop up the banking system. All of the Fed's decisions taken into totality, do you think they're choosing a decade of stagflation? And if so, how can people prepare for that?
Well, I mean, we'll talk about preparing. That's the easy part. And are they choosing it? I don't know. I'm not sure how smart they are, how much they really understand how broken their model is. But clearly we are headed towards stagflation. I mean, look, the one thing that if they did this right, having inflation, if the inflation didn't get too far out of control, very much, I mean, and not for too long a period of time, having a high inflation rate and keeping everybody employed and working and allocating those resources to the correct things, it's theoretically possible we could grow ourselves out of this. And that would be kind of the best case scenario, like what happened after World War II. Now, the demographics there were much better. You had all these GIs returning, they got married, they had kids, they bought houses, they bought dishwashers, they bought cars. And so there was a lot of economic growth as a result of that. But, I mean, if you're going to say, well, your choices are, stop inflation and have the economy collapse, or, keep the pedal to the metal and have high inflation, but at least everybody's got a job and we're building and doing things, maybe not always the right things. I can see why they choose the inflationary path. And the problem is, are we going to spend it on things that are, will the interest rate be set correctly so that we allocate the capital to the right areas, or do we piss it away on stupid stuff? I mean, I think one of the other reasons why, we're in this mess and we've got all the debt that we've got is that, my generation, the boomers, just made this tragic error after 2000 of deciding that, we needed to pacify the Middle East. And, we wasted $8 trillion on multiple military adventures, which only angered the world, killed a lot of innocent people, and theoretically secured oil. Although they didn't really even do that because now the Syrians and all these guys, Iranians, are selling their oil to China. But that was $8 trillion wasted. And at the same point in time, China spent that money and they built out their electrical grid, and they built nuclear power plants. And so I found it one of the most interesting things I've read recently was a study that talked about how the Chinese pay half as much for their electricity as we do. The average electrical cost in the United States is about 13 or 14 cents a kilowatt hour. And then in China, it's about 6 cents a kilowatt hour. So, yeah, right. And everyone needs electricity to live, right? We all have an electrical bill. And if you have an electric car, you buy, your electric. So the Chinese are basically, as a result of investing in the right things, have a much lower cost of electricity, right? And that's where we should be. I mean, but to do these things correctly, to make the proper choices, the capital has to be allocated correctly. And for the capital to be allocated correctly, it's got to be priced correctly. And when you've got a Federal Reserve that says, the interest rate should be 20% or 7% or 10% or 0%, well, guess what? That's going to lead to distortions and not putting the money in the right places. I mean, all the 0% got all the leveraged buyout people rich, but, nobody wanted to invest in actually building stuff because you could get a higher return by shuffling paper. So, it's really a rather sad thing, the way this economy has evolved and the situation that we're in today. But it's not hopeless because we can fix it. So, and that's, you asked, part of your question was, well, how do you protect yourself from it? I mean, the book talks about this, I know it, but we'll just say it for your listeners. I mean, you absolutely positively have to, if you have savings, and everyone should try to have savings if they possibly can, just try and save 10% of your income, and put it into things that can't be printed. So bonds can be printed, even stocks can be printed, although, they have more value than bonds. But the real things that can't be printed are Bitcoin, gold, and silver, and real estate. And that's why these things have, generally speaking, performed much better than most of the alternatives. I mean, even stocks, unless you're in the Mag 7, even stocks, which have done pretty well, gold has crushed them since 2000, since the age of this real serious money printing began. So, that shouldn't be the case. I mean, you should get a better return investing in productive enterprises than you get investing in an inert rock. Okay. But you don't. And the reason you don't is because the system is broken and, the inert rock isn't really appreciating in value. Your dollars are depreciating in value because they're printing more of them. So.
Yeah, very well said. The best investment in an era of endless money printing and net debt growth in order to support GDP is something that just cannot be printed, right? 95% of Bitcoin supply is now in circulation, which is incredible. As of the last halving, Bitcoin has, I think, the same, if not lower, and a yearly inflation rate.
It's half the inflation rate of gold. It's 0.8, and gold's 1.7. And, in another 2.5 years, I think it'll be, 0.4. So, look, Bitcoin is the hardest money ever invented. It's a stunning invention. It was kind of God-given. I mean, thank God for Satoshi. Because, for thousands and thousands of years, mankind has suffered with money that was always changing in value because its supply was never fixed. And finally, medically, scientifically, whatever, however you want to describe it, Satoshi created a system which, provides true provable digital scarcity. And it's hard for people to get their heads around that, but that's a really big deal. And I think it's going to change the world in a lot of ways and make it a much better world.
Well said. So I want to share a chart. This is a chart of the deficit, and I also have a chart of the debt to GDP ratio. You mentioned that growing our way out of this is a solution. I think it's a solution that's going to be hard, but it's one that everybody should strive for.
Yes.
And it's one that everybody should hope for, right? The reason that we're in Bitcoin is because even though there's this huge issue on the other side, I fundamentally believe that Bitcoins are financial optimists rather than financial nihilists.
Absolutely.
Maybe a bit of a balance between the two, depending on the day, but certainly erring on the side of optimism more than that. This is a pretty pretty big problem. Since Trump got in office, the deficit has risen, has narrowed a little bit relative to GDP. Still not really a material dent here, though. How on earth does this problem get fixed?
Well, I mean, I think it's a great question, and I'm not smart enough to have the answer. But I think that if I were advising the administration, I think I would basically, well, I mean, there's an argument you just go for a complete monetary reset right now, and that's probably the best solution. But I think that politically that's impossible. Everyone would say, "What the hell are you doing? You don't know what you're doing. We don't need it. We don't believe in it, etc." So, since that's not a realistic possibility right now, I think probably what you would do is kind of what Trump's trying to do, which is to say, you put heavy tariffs and you get a little bit more work on the list so that other countries pay their fair share. I mean, we've been supporting militarily, we've been protecting the whole world, and we can't afford to do that anymore, and we shouldn't do that. You suppress interest rates and you do run the economy hot, and that's an inflationary thing. But at least through bringing interest rates down, you'll bring your deficits down. Then I think you actually go after and you start to touch the third rail. I mean, I think you have to go to the boomers and say, look, you've had a pretty good run, and we're going to means test your Social Security payments and so on and so forth. And so, you just drive hard to get the budget balanced. And then I also think you try to do some of the Chinese things, some of the industrial policy things. I mean, we should be giving subsidies to students who go to trade school, or giving subsidies to students who go into engineering. I mean, we've wasted all our precious resources on making people into finance jockeys and trading stocks and playing around with this casino called Wall Street. And Wall Street really doesn't do anything. It just moves a lot of paper around, moves a lot of digits around, transfers wealth from one party to another party. I mean, my book talks about this a lot. The way that the world gets better is that productivity increases. And productivity increases when you invest in the right things. And so if you really want to look at who makes our lifestyle get better, it's engineers who have breakthroughs that do things better, cheaper, faster. And we all benefit from it. I mean, look at how we're benefiting as a result of the internet. We're talking to each other from different parts of the country. We're broadcasting to thousands of people. That's all engineering, and so that's really where we should be putting our time and our efforts. And our government, the government should lean heavily into trying to make us more competitive on an engineering and productivity basis, not on a financial basis. The Wall Street needs, I mean, and Besant and Trump have said this, that, Wall Street's been winning for a long time. Main Street needs to win for a while. And Main Street means, people who make things, do things, work at things, and engineers who make the world, more efficient. And, again, my book says that, you've got to have the proper price of capital to know where to invest. And when the price of capital is vastly distorted, as it has been when interest rates were held at 0%, people don't invest in the right things. Engineering things don't get invested in, as I said, because people would prefer to speculate. And so, this is really the core of the problem. And, if instead of spending $8 trillion on wars in the Middle East, we'd spent $8 trillion making our infrastructure better and building nuclear power plants, we'd have electrical costs similar to the Chinese. And I don't think there's a person in this country who wouldn't enjoy seeing their electrical bill be half what it is. I mean, I'm kind of shocked, actually. You live in Massachusetts too.
Especially here in New England. Yeah, I was going to say.
Yeah, I mean, I think I've seen, and it varies depending on what buys they do, and because they're always purchasing energy from different places. But my kilowatt hour cost in Massachusetts varies between like 28 and 35 cents. I mean, now I know it's worse in Europe. I get that. They're really crazy. But the point is, I'm talking to you now from Florida. You're here in Florida because they're getting a lot of energy driven from, natural gas coming out of the Gulf. I think my electrical cost here is closer to 13 cents. So, it's an incredibly important thing to if we want to have our lifestyles be better, we need to allocate capital appropriately in productive enterprises. And if that's the other thing I often say, Joe, and I know you'll relate to this. I mean, think of all of the things that we've done technologically since 1980 when the PC kind of came on the scene. I mean, the internet, I mean, just all the things we all should be working 30-hour, work weeks and have incredible lives of leisure. Do you know what I mean? as a result of
Yeah,
the
the Jeff
productivity.
Booth thesis, right? This technological
Yeah,
deflation, but on the other side of it, because they want to have 2% price inflation forever, they've manufactured way more money printing than is necessary. And so instead of
exactly.
this abundance, we have this material abundance, but as far as dollars go, they've never gone less far as they do today.
Exactly right. And then furthermore, because of the cantillionaire effect and the way that some people are able to access that money cheaply, and the average person has to pay 28% on their credit card, all that extra money they've created has flowed to the top. And this is why we've got some people who are richer than Croesus, and the person down on the bottom, their wages have not kept up. And so it's just an incredibly unfair and broken system. And again, that was really, I mean, we haven't talked a lot about the book, and I don't want to push the book too much here, but I mean, I think one of the important points of the book, and I tried to make in the book, was, I wanted to educate average Americans as to why they've been screwed for so many years and how it happened, because it was kind of a subtle process, right? At 1913, 6102, 71. I mean, there are all these touch points where it got worse with each one, right? And now it's really kind of out of control. And then say to them, okay, that's the bad news. The good news is there's actually a way you can fight back. You can claim monetary sovereignty, you can support sound money, you can save in something that will not be debased. And if we all, and Jeff's a friend, and we've talked about this several times, and he said to me, he said, Larry, if we get everybody to use this tomorrow, we could collapse this whole damn system and we'd be on a Bitcoin standard. And he's right. But of course, getting from where we are right now to everybody using it, that's a long ways away. But yes, that is his thesis.
Yeah, driving mass adoption is the one thing I want to talk to you about next. We've seen this massive explosion in Wall Street connecting with Bitcoin. It began with the ETFs, obviously in January of last year. Those have proven to be some of the most successful instruments that these asset managers have issued. BlackRock's IBIT ETF is the single most profitable venture currently. I think $284 million or thereabouts every single year in terms of revenue, something crazy like that. More recently, you've seen the rise of Bitcoin treasury companies, and you've also seen a lot of developments as far as the banking system directly integrating with Bitcoin, or integrating with Bitcoin in adjacent fashion. Bank of America, Morgan Stanley, both of them have just recently issued structured notes against IBIT. And so it seems like there's a lot of demand coming from Wall Street, but at the same time, Main Street as well is hotly in demand of Bitcoin. Square recently launched this ability for any merchant to accept Bitcoin payments, which is crazy. I could go down the street to the local coffee shop and tell them about this. They can enable it. They don't even have to know what Bitcoin is, and I can pay them in it. Really, on both sides of the aisle, both Main Street and Wall Street, we are seeing a lot of adoption trends, really, really strong adoption over this last year in particular. What are your thoughts on Bitcoin adoption currently? What are the biggest gaps that have yet to be filled and need to be filled in order for us to?
No, I think you're right. All those things are great. I mean, I went to Steak and Shake the other day, and I bought my dinner with Bitcoin. It worked seamlessly. It was a thing of beauty. I think you're absolutely right. We're at that stage now. I mean, Saylor calls it the gold rush stage, where everybody wakes up to it, and I think that's what's going on. I think one of the things that's hard for everybody to get their head around, it's even a little hard for me to get my head around, is, if somebody had told me a few years ago all these positive things are going to happen, and the price isn't going to triple again, I'd have said that's impossible. And yet here we are. These things have happened, and the price did kind of triple. I mean, if you started maybe back at 20,000, it's up quite a bit since then. But and it's easy to get impatient and think, well, we should be at 200,000 or 300,000 a day. We probably should be. I mean, I think there's been paper Bitcoin created. To be fair, I mean, there's a guy on Twitter called Checkmatey who does James Check, who does a really nice piece of work and shows all the Bitcoin derivatives out there. Some of these structured products, I mean, I'm not sure they really own the Bitcoin. They're probably just selling against, their balance sheet and claiming they own the Bitcoin. So like gold, there's the potential that Bitcoin has been somewhat held down and manipulated. But unlike gold, Bitcoin can move really hard, really fast. And, my sense is people who are on the wrong side of this are going to get their face ripped off when it finally does decide to go up a great deal. And I think it will go up a great deal because, I mean, and a lot of the pure Bitcoinists are kind of like, well, this really stinks. This was anarchy money, and I hate the fact that Wall Street's involved, but this had to happen, and it's okay. I mean, and you want it to happen, and what it'll mean is the volatility will slow down. I mean, I've seen some studies that show that the volatility has come down substantially, but that's natural, and you would expect that as it becomes money. There's not going to be quite as much. The rips aren't going to be as large, but the decreases aren't going to be as large. And so, we're just in that whole process. I mean, what I watch address growth, wallet address growth, and it's just nice and solid. I watch hash rate growth. It's nice and solid. I watch the price as against the power law. We're just trending up. We're a little bit below it right now, but recently, I mean, you consider everyone's down right now because we're at 90,000, but not that long ago we were at 124, and we'll be at 124 again soon. We'll probably be at 150 sometime in the next 6 months. So, this is just the way it is, and having been at it since 2013 or 14, I've just seen so many of these. I mean, and you get the FUD, Bitcoin's dead, or the more recent FUD is, MicroStrategy is going to blow up. Saylor doesn't know what he's doing, and I mean, I find that stuff hilarious because I've tested his whole thesis 10 times from Sunday, and that damn thing is bulletproof. I mean, there's just unless Bitcoin dies, Saylor is going to end up the richest man in the world. So it's I view it all as good, and yet because I'm like any other human and I'm impatient. Do I want it to happen faster? Yeah, because I know that things will be better on the other side. But we have to live with it, and we have to understand what it is. And if you consider how far we've come, it's pretty far. And I think the next 5 or 10 years it's gonna take it just as far. And there'll be a time when we're talking about, Bitcoin's at 500 and we'll be depressed because it used to be at 700. But some people say, hang on a second, you bought a whole coin for less than 100,000? Oh yeah, I did that, and that'll be you kind of be a rock star in your family for having done that. And so, it's just it is what it is. It takes time, and it's easy to miss. It's easy to take your eye off the ball, but it's, and yet in many ways it's difficult, but it's simple. It's difficult because mentally you've got to be prepared to do it and watch the ups and downs. But it's simple because all you really have to do is make one decision, which is to buy it and then forget about it and hold it and go live your life. So, if you can do those two things simultaneously, you're in great shape.
Absolutely. Yeah, Bitcoin's price can vary day to day, but Metcalfe's law states that a network's value grows exponentially with its number of users.
Correct.
And I like how you mentioned that you track wallet addresses, because that means the fundamental value of the network is going up. So its dollar price may fluctuate, but if you zoom out, you look at the weekly time frame, monthly time frame, yearly time frame, you just see up and to the right.
That's exactly right. More people are using it. More people understand it. I mean, it's everywhere you go. And you've had big time doubters, flip on it. I mean, Larry Fink flipping. I mean, the CEO of the largest asset manager in the country flipping on it. I mean, Vanguard, which was originally, the CEO lost his job over not supporting the ETF. I mean, and they prevented their clients from buying it. They recently flipped on it. Jamie Dimon has actually kind of flipped on it. I don't think he's embraced Bitcoin, but he's letting his bank use it as collateral, and he's embraced the blockchain. And, that's probably as close as he's going to get for a while. But the point is that, and gold guys, I mean, like Ray Dalio is a brilliant hedge fund manager, built one of the biggest, most successful hedge funds in the country, and was a gold guy basically. And I've watched him evolve over the time. And originally was very skeptical of it, didn't believe in it, and now it's kind of like, yeah, I get it, and it's something you should own as well. It's a part of the portfolio. So, you're just seeing more and more adoption as time goes by, and I think that's only going to continue. I mean, you can't stop a good idea. I mean, I'm sure there were plenty of times, in the 20s where people were like, oh, these automobiles, is this really going to work? They break down a lot, whatever. But, they're expensive, they're noisy. Oh my gosh, people get in crashes and die. I don't know about this automobile thing, but, it was a good idea, and it just kind of kept on growing and growing and spreading and spreading. And I think that's what I think Bitcoin is. It's a good idea that more and more people are going to come to understand. And as they do, they're going to adopt it, and they're going to save in Bitcoin terms, and they're going to be rewarded for doing so. And that's the way it should be.
Very well said. Final question here for you, Larry, and thank you for being so generous with your time. I really appreciate it,
No
especially
problem.
so
We go
close
longer
to
to life.
Christmas on a Friday too. So we're really we're buzzer beaters here. But per the name of the show, Over the Horizon, I love the final question that I love to ask all my guests is, over the next year, over the next 5 years, you can talk about markets, you can talk about any number of things. But as far as you're concerned, what are the biggest developments over the horizon that you have in mind? Could be Bitcoin's price, could be some type of institution. What is it that's got you excited over the next year, 18 months?
Yeah, that's a great question. Well, I think we're going to break out of this period of consolidation and go on another strong run. And once again, everybody who didn't believe in it is going to wake up and go, oh my goodness, I missed it again. And, that strong run is going to take us to 150 at a minimum and maybe 400 at a max, and call the midpoint maybe 250 or something. And I think when that occurs, there'll be all those people kicking themselves saying, God damn it, I should have listened last time. And sadly, some of them right near the top are going to say, "Oh, I can't stand it anymore. I got to buy some." And then, of course, they'll have another correction, as we always do. And they'll, just like we have been, they will be challenged to hodl. I mean, I always tell people who are looking at getting into it, you've just got to be prepared for it to go down 50% and think to yourself, if it does, I want to buy more, not sell it. Because if you can hold it for a long period of time, it always works. And so I think that, eventually we're going to see wide, broad spread adoption. And, it's, to me, we're very close to that kickoff point. And there are days when I think to myself, Samson might be right. This one may not take us to 400. It might take us to 1 million. I mean, it depends on how the authorities respond. It depends on how bad they are about printing money, whatever it might be. But we've all said gradually and suddenly, and the gradually piece has kind of been up until now, although it's done pretty well. But at some point, there's going to be a suddenly piece, and I use the power law, which Fred Krueger and Giovanni Stanasasi developed as my model for kind of the downside base case. But I think eventually the power law will get broken to the upside. I think that what will happen is, Gresham's law will kick in. And I've studied hyperinflations, and one of the things I found in looking at them is that hyperinflation occurs when everybody in a society comes to the conclusion that they can never stop printing the money, and therefore it's going to become worthless. And so what happens is you see this whoosh out of the money. It's kind of like fire in a theater, or the Titanic sinking, or an avalanche breaking loose. I mean, it's just like whoosh. And so I guess one of the things that I think I'm looking forward to and I'm interested in, and I think has the potential to happen within kind of 2 or 3 years, is that whoosh. They have to put in yield curve control. Bitcoin goes to 300,000 or 400,000. Inflation gets way out of control. The bonds get harder and harder to sell. The Fed balance sheet goes from 8 trillion or 6.5 trillion now to 15 or 20 trillion. And just the whole world goes, do you have any Bitcoin? Do you have any sound money? Because good God, this thing is failing right here, right now. I mean, I sincerely think that, within a 3 or 4 year window, that might happen. I mean, I can't promise it's going to happen. I can't guarantee it's going to happen, but I think it might happen. And at that point in time, it'll be game over. Now, you'll still be able to buy it at 200 or 300 or 400, and it'll be on its way to 1 million or 2 million or 4 million. But the point is, it will be game over. There will be no more, Bitcoin is going to die. It'll be like, okay, this is working, and literally everybody will have to say, okay, and if they don't have some Bitcoin, it's like Safe says. I mean, it's like gunpowder. You either got to own some so you can defend yourself, or you're going to be the victim of those people who do own it, because they've got a better weapon for storing their monetary energy. So I guess that's kind of what I'm a little bit excited to see. I mean, I'm just sitting on the edge of my seat, because I think the next 5 years are just going to be wild. I mean, it's to me it all culminates in the early 30s, and so here we are in 2025, and I just don't see how we don't have a really, really wild 5-year ride here. But I can't predict with any certainty how it's going to happen.
Absolutely. It's going to be exciting. I think one thing is for sure, though, over the last 2.5, 3 years, the Fed has been on this tightening cycle. Last year, they began lowering rates. Now they're moving into outright balance sheet expansion. So if Bitcoin managed to rise from 18 grand to 126 grand in that environment of tightening, I can only imagine what it's going to do now that they're outright.
That's exactly right. Yeah, somebody had a great chart on that on Twitter. Said, look this is what happened when they were tightening. Can you imagine what happens when they realize they can't tighten anymore and they have to go crazy on the printing? I mean, oh dear God, right?
Yeah, this is one of those charts you can see here. While they were tightening monetary policy, Bitcoin ripped from 16 to 126. Now that this line, the Fed's balance sheet, is going to go back up and to the right, and they're bringing rates down even further. I think another 25 basis point cuts are priced in. It's all bets are off as far as what Bitcoin's going to do, barring recession, of course. But if we're able to navigate this without recession, then it's going to be a fun time for Bitcoin.
So yeah, and I think it's very important to recognize that this is right around the corner. I mean, I know there are a lot of Bitcoiners who are really depressed. I mean, I've got Bitcoiners, friends I put into this thing, paid 100, 110, whatever, and they're kind of like, God damn, man, this thing's really not working. I'm like, you've been in it for 6 months. Just relax. I mean, it's not a get rich overnight kind of deal. it's a consistently get rich over years and decades kind of deal.
Yeah,
And
someone once described it as Bitcoin's not a get rich quick scheme, it's an avoid getting poor slowly scheme.
exactly. And by the way, if you can compound something, I mean, I always tell young kids or people starting out in their careers in business, get yourself a financial calculator, and so that it does automatic compounding for you. And put in 10 years, 20 years, 30 years, 40 years, and put in a return of somewhere between 5 and 20%. Keep it low, it doesn't matter, and let that compound thing do its thing. And you realize that, I mean, the great advantage you and so many others, I have less of it because I'm 68, but the great advantage so many young people have is they just got time on their side. And so if they hold a decent asset and let it compound over a bunch of years, it gets to be a really big number. And that's what's going to happen here.
Absolutely. Lawrence, thank you so much for coming on the show. I really appreciate it.
Oh, thank you, Joe. I always enjoy talking to you. You've got great charts and great work.
Yeah, absolutely. And before we sign off here, where can people find you, and where can people order your book as well? Obviously, you've mentioned it before, but
Yeah, thank you.
want to go and buy it now for
that's the big print. Yeah. What happened to America and how somebody will fix it. So probably the best way to find me, I accept DMs and all, is on Twitter. I'm just under my name, Lawrence Lepard. I make a lot of noise. I criticize the bankers a lot. I'm pretty aggressive. Somebody said to me on a pod I was on this morning, "Hey, you really don't give a fuck, do you?" And I said, "Yeah, you're right. I kind of don't." But fortunately, I'm at that stage of my life where I don't have to. I can kind of be honest and just call them as I see them. So I'm on Twitter. But the way you get the book, I haven't had a mainstream publisher pick it up, and the reason for that, I think, is it's too edgy. It's pretty aggressively, negative on the system and the Federal Reserve, and so no publisher wants to handle it. But fortunately, Amazon solved that problem. One of the great decentralized things that has happened in the last 10 years. So I published it on Amazon. It's hardcover, softcover, audio, and Kindle ebook. So it's available there, and anyone who buys it, I really appreciate that. If you like it, I would say, anyone asks, what can I do to help this? If you believe in this theme, if you buy some Bitcoin, if you get into it all, and you want to make the world a better place, I think one of the most important things you can do is spread the word, spread the knowledge. And I wrote the book. I tried to write it as a tool designed so that you could give it to a friend or a citizen, anybody in your country, and say, "Hey, this is a real issue. This is something you should consider. Read this book, and it explains why." And I think it accomplishes that. I've gotten, I mean, some people disagree, but I've gotten a lot of feedback that suggests that it accomplishes that. So for that reason, I recommend it. And everyone who's bought it, I'm deeply appreciative. I mean, my goal is to orange pill the entire world. My secondary goal is to fix the monetary system so that my kids and grandkids don't have to live in the screwed up system that we currently have.
Amen. Very well said. I can attest it is a great orange pilling tool. I lent it out to a friend, and he texted me and said that he needs to buy more Bitcoin. So buy it for a family member and buy it for a friend, 2 copies of the book, and of course, read it yourself. Lawrence, thanks again for coming on.
Well, thanks, Joe. It's always good to be with you. Really enjoyed it. Merry Christmas.